Hey folks, welcome back to Venture Capital Strategies. I've got a secret, a big one. Ready for it? This is my magic crystal ball. It tells me exactly what the stock market will do. Kidding? If anyone ever says that, run. They're either trying to sell you $1,000 course or they just watched way too many sci-fi movies. There's no crystal ball for the market, but there are strategies that tilt the odds in your favor, and today I'm spilling the tea. Stick around. If you're new to this wild world of investing, here's a crash course. A stock is a small part of a company. When you buy one, you're essentially saying, hey, I believe in this company. The idea is simple. Buy low, sell high, and make your money work harder than your coffee machine. But here's the catch: most people pick stocks like they're choosing pizza toppings, randomly and on impulse. Let's talk about something everyone asks me: how do I pick stocks? What's the secret sauce that helps me trade confidently and profitably? Well, today, I'm going to let you in on my strategy. For those of you new to investing, let's cover the basics. When you buy a stock, you're essentially buying a piece of a company. If that company grows in value, so does your investment. Sounds simple, right? But here's the tricky part: picking the right companies. That's where strategies like technical analysis and fundamental analysis come into play. There are two main ways to analyze the market: technical analysis and fundamental analysis. Technical analysts are like detectives. They examine charts, patterns, and trends to predict what might happen next. It's all about timing. In fact, I often compare technical analysis to playing chess. You strategize based on patterns, trying to predict short-term movements. Personally, I use technical analysis frequently, especially when managing my long-term positions. It allows me to identify optimal entry and exit points, adding precision to my investments. But here's one of my secrets for investing in the stock market and Forex. I combine technical analysis with fundamental analysis in a very specific way. When it comes to selecting stocks to hold for 3 to 5 years, I focus heavily on fundamental analysis. This means digging deep into a company's financials, evaluating its leadership team, and understanding its market position. Think of it like getting to know someone before committing to a long-term relationship. I'm primarily a long-term investor because it's generally safer and more rewarding to hold stocks over an extended period. However, I do enjoy acting as a sniper from time to time, scalping profits during short-term price movements. This often means re-entering the same stock later at a more favorable price. Next, I'll create a detailed video about riding the market waves using signals, averages, and strategies like the 10-week moving average. But for now, let me give you a quick overview of how this technique works. Now, here's where the fun begins. Meet the 10-week moving average. This is like the stock's comfort zone. When a stock is strong, its price tends to bounce off this line during pullbacks. It's like a trampoline dip, bounce, profit. For example, look at NVIDIA, NVD, in September 2024. The stock pulled back to its 10-week moving average around $420. By November, it rebounded to $485, delivering a sweet 15% gain. Or Tesla, TSLA. October 2024, it hit $250 at the 10-week average, and by mid-November, it climbed to $295. That's an 18% jump. If only my houseplants grew that fast. Now let's talk numbers. Before I touch a stock, I dive into 3 key financial documents. 1. Balance sheet. Is the company swimming in cash or drowning in debt? For example, Apple's current ratio in November 2024 is 1.5, meaning They can comfortably cover short-term obligations. 2. Income statement. How profitable is the company? Take Tesla. Its operating margin is over 17%, showing it makes good money after covering expenses. 3. Cash flow statement. Is cash growing? If it's negative, but they're paying dividends, big red flag. It's like borrowing money to throw a party, unsustainable. Numbers are great, but they don't tell the whole story. I also look at brand recognition. Coca-Cola isn't just a drink, it's a global icon. Leadership. Elon Musk may tweet a bit too much, but his vision for Tesla is undeniable. Industry trends. Think EVs, AI, and renewable energy. These aren't just buzzwords, they're shaping the future. Industries evolve. My grandma's house was heated with coal, then gas, and now renewable energy. Staying ahead of these shifts is crucial. For instance, I've been watching AI closely. It's not just a buzzword, but the backbone of future industries like healthcare and finance. Pro tip, check social media and news. Remember the GameStop saga? Retail investors turned the tables on Wall Street, proving that news and sentiment can move mountains or stocks. Now, let's avoid rookie mistakes. 1. Chasing hype. If everyone's talking about a stock, it's probably too late. 2. Ignoring risk management. Always set stop losses. If a stock breaks below its 10-week moving average, it's a signal to reevaluate. 3. Overloading on one stock. Diversify, folks. Don't put all your eggs or dollars in one basket. Risk management is key. While I enjoy picking individual stocks, I always diversify with index funds like the S&P 500. If one company fails, I'm still protected by the broader market. So there you have it. How I pick stocks using a blend of technical and fundamental analysis with a sprinkle of 10-week moving average magic. If you learned something today, hit that like button, subscribe, and turn on notifications. Drop your questions below, and let's grow smarter and richer together. Timing the market is nearly impossible. Instead, I use dollar cost averaging. By investing regularly, I reduce the risk of buying at the peak and average out my cost over time. It's a simple yet powerful strategy, especially during market downturns. Remember, investing isn't about luck, it's about strategy. See you in the next video.